Hello and welcome to another edition of Buy, Hold, Sell. I'm Camilla from the Corporate Affairs team. Today I'm joined by the small mid-cap guys, Will, Sam and Cooper. Just a quick disclaimer on your screen that we're filming this on the 21st of March. Will, Playside Studios, office rumour is you were a little gamer back in the day.
Massive.
Do you like this stock?
Playside Studios is a buy. I was a massive gamer. I think the easiest way to understand Playside is exactly the same as you think of a movie or a TV producer. So think of a TV show like White Lotus or a movie that's just come out like June. These producers are creating content, and it's the same for the gaming studios. They create games, whether it be for Xbox, Nintendo, PlayStation. I think the massive tailwind is you've now got the likes of Facebook, Netflix and other streaming services wanting to get into the gaming industry because they see how much the younger generation, those below 25, are spending so much time on the internet, so much time gaming. So we've got to know this company over the last few years, and we've been buying it in the micro portfolio. We really like management. They are well in tune to what's happening within the industry, and over the next 3 or 4 years they're going to come out with a lot of new games, and historically they've been helping other producers make their games. Now they're making their own games, and this is where they make the real serious money. So I don't think they're going to have extreme success in every single one of them, but like a TV producer, they'll make 10 different TV shows and you only need one to make a lot of money. So I think it's going to be an exciting period for Playside, so it's a buy.
Passionate gamer, I love it. Cooper, what about Austin Engineering?
Yeah, Austin Engineering, I've talked about this one before. It's a buy. We have a substantial position at WAM, but it keeps delivering. I suppose globally the revenue keeps increasing through its trays and bucket sales. And also this week it just announced a new contract with an OEM, which is a kind of truck manufacturer. And that opens up a whole new revenue stream for Austin. Its EBITDA margins across its APAC division are improving, and that's been a focus for the company. Also, its cash flow conversion is improving, and that again is a new renewed focus for the company. So with those two combined, I think we'll bring Austin into a net cash position by the end of the year, and I think that gives its license to go and look at acquisitions again. And the market will welcome this based on its last acquisition of Maintech. It's gone really well. So yeah, Austin's a buy for us.
Sam, Braa, what are your thoughts?
Yeah, Braa, despite being mission critical software, they had a near-death experience probably last March where the previous management team effectively ran the business into the ground. And they effectively had to do an emergency capital raise back then. So since then, there is a new CEO that's come into the business. He's previously worked at REA Group, so realestate.com, and Class as well, which previously got bought by Hub. He has a great track record in running and turning around these types of businesses. What he's doing is reducing costs. He's reduced CapEx as well. And the most important thing is that he's actually going back to all the previous customers and addressing the underpricing that they've got in their contracts. So what you'll see is this beautiful tailwind of like revenue growth, positive jaws, reduced costs, and you should see the stock continue to outperform. Now it's trading at about a 25% discount to its software peers. We believe that the catalyst of earnings and M&A will close that gap.
All right, Will, another fashion retailer, Accent. How do you like these guys?
I like Accent. Bit like Universal, they've had really good success in launching a couple of new brands, being Nude Lucy and Style Runner, which my girlfriend loves. The only thing that I've still got questions about with Accent is just trying to understand what they're going to be doing with Athlete's Foot. They're buying back all the franchises and the impact that's going to have on their balance sheet and profitability. Going forward. It's not a management team I want to bet against, so it's not a sell, and it's definitely one that I'd probably consider buying. I'm just waiting to understand what the potential impacts are of the next stage of growth, so it's a hold for the moment.
All right, we know Mel has good taste. Cooper, Wildcat Resources, will they be the next lithium producer in Australia?
Yeah, certainly well positioned to be. We kind of like the lithium space at the moment. It seems to have bottomed. It's acting rationally. Which is something it hasn't done in the past. It's a lot of supplies come out of the market in this latest downturn, so that enables kind of a base where prices might be able to rise again. And we've seen in the last 2 spot auctions that have happened at market, they've happened above benchmark pricing. So it's positive signs for the lithium space in general. We like Wildcat. It's got 2 things going for it. Its proximity to port. It's 50 kilometres from Port Hedland, also 50 kilometres from PLS's Pilgangoora asset, so it's in a good jurisdiction, but it's also on a granted mining lease already. It's got a maiden resource that's due imminently, and then because it's on that mining list, we think it can get into production reasonably fast and take advantage of this next uptick in the lithium market. So definitely could be one of Australia's next lithium producers, and it's a buy for us.
And Sam, Sigma Healthcare.
Sigma Healthcare is a hold for us. They've done a transformational acquisition where they reverse listed Chemist Warehouse Group into the business in late December last year. Chemist Warehouse Group is an exceptional business. It's got 8% of the local stores in Australia, but 25% market share because they just dominate the local industry and outtrade all the other pharmacists. Now, we believe they can replicate that model in New Zealand, Ireland and China over the long term. However, in the short term, we still need to get over the hurdle of ACCC approval, which is going to happen later this calendar year. And so into that binary event, we believe it's a hold if you've got some.
All right, Will, Neuron Pharmaceuticals, one you've spoken about before, I believe.
Yeah, this has got to be one of the greatest overnight successes 20 years in the making. And it's been it's a 10-bagger in 18 months or maybe 2 years. And I think a lot of that credit goes to John and Jerry and the team that have been able to partner with Arcadia 3 or 4 years ago now to be able to get this drug into market. So the initial sales have been good. And then I think the second really good thing happening is they've got all their phase 2 trials coming out this year, which shows the next stage of growth. The reason it's a hold at the moment is because I'm just not sure that the sales of trofinetide in the US are going to be as linear and as hockey stick up as the market's expecting. I think it's going to take time for the market and for the girls that are taking the drug to actually find the right dosage, and I think it's going to impact sales, so it'll be a bit lumpy. So I just think for the moment it's a hold. However, they've done an amazing job.
Cooper, another WA company, Genus Plus, a buy?
Yeah, I'm very fortunate to go to WA last week and sit down with founder and 55% shareholder David Ritchie, so it was awesome to chat just big picture with him. Genus Plus is positioned to take advantage of, I suppose, the electrification of the grid. Australia's expecting a 9-time increase in renewable energy as kind of an input source for our energy, and with that comes basically a whole reconstruction of the power grid. It's about a $20 billion project. It's been announced by the government as well. And so David's positioning himself to take advantage of that. They've just been awarded a portion of the $1.5 billion Hume Link East contract. And basically that gives them a footprint in the East Coast. We expect that to be the first of many projects as that electrification happens across Australia. And Genus Plus are well positioned to take advantage of it. So yeah, it's a buy.
All right, Sam, HMC Capital, formerly Home Consortium. What are your thoughts?
Homeco's a strong buy for us. What I think the market's consistently underestimated here is David DePilla and his team executing a phenomenal strategy in terms of getting deals done in a really tough real estate market. You can see that because he was the orchestrator of effectively the Sigma Chemist Warehouse deal that I talked about before. But also, he bought those hospital assets recently during the year and a number of ways that he's managed to increase FUM within the business. Now, he's targeting $20 billion of assets under management longer term. Consensus has that about $13 to $15 billion. And so as they scale towards that target, there will be significant operating leverage and the stock will continue to outperform. So it's a strong buy.
All right, we'll actually stick with you to finish up.
Yep.
Biggest dealership in the country, Eagers Automotive. How are they benefiting from the new car sales?
Yeah, new cars are flying, but AP Eagers is a sell for us. Whilst new cars are flying and that helps the top line, that comes with increased supply across Australia, and that actually crunches their gross margins for all the dealerships, and AP Eagers isn't immune. You couple that with the fact that they've got cost inflation pressures and obviously rapidly rising interest rates on their inventory financing, and we think that consensus is overestimating the margin trajectory over the next few years. We're believers in the BYD story and the consolidation opportunity for AP Eagers. However, we just need to see some downgrades from consensus before getting excited. So for us, it's a sell.
All right, and that's everything for today. Thanks, guys.
Thank you.